Good afternoon, everyone. It's a great pleasure for me to welcome Cayman Wills, Global Head of Equities at JP Morgan Wealth Management, and Peter Cook, Chief Communications Officer at the American Bankers Association and former Bloomberg Washington correspondent to the Walker Webcast. I've had a longstanding relationship with JP Morgan, and I'm extremely thankful that Cayman is taking the time today to provide our insights on the markets. And as full disclosure, Peter is my oldest friend in the world. We were in one another's weddings, and his insights into Washington after years as Bloomberg's top Washington correspondent, and then as a spokesman for Secretary of Defense Ash Carter at the Department of Defense, and now as the chief spokesperson at the American Bankers Association, is as good and insightful as you will find. And so, Cayman and Peter, thank you very much for joining me. We did a pre-call yesterday thinking that we were going to have some data to talk about today, and either fortunately or unfortunately, there isn't a lot of clarity in our world right now. Peter, let me start with you. Give us your take on what happened last night in the presidential race and when you think we'll have an outcome.
Well, first of all, Willie, thank you for having me. Pleasure to be here with Cayman. I thought for sure we'd be talking about, old stories from you and your youth. Happy to go there if you want later on in the webcast. With regard to the election, Willie, I think we all woke up this morning with the realization that this is a very divided nation, remains very divided, and Election Day in America only bore that out even more so. We are looking at very, very tight races in a number of states in the country. We did not see the blue wave that some people had forecast, and yet the biggest prize, the White House, remains perhaps within reach for Joe Biden and the Democrats. There is a pathway to get there, but certainly there's a pathway for President Trump as well. And I expect we're going to have some legal challenges. We certainly are going to have some vote counting that's going to continue on certainly this week and perhaps beyond. And it's not clear to me, Willie, that we'll get an outcome in the short term, meaning today. But I do expect it will be, we're talking about days rather than weeks at this point, given what I'm hearing right now from the folks that I know in the politics world, both on the Republican and Democratic side. Again, legal challenges will determine a lot of that, but some things are coming into shape, and we'll know more certainly by the end of the day today.
Is there anything, Peter, that could happen that will make the result happen quicker? In other words, of the outstanding races, let's just say either Trump wins X number or Biden wins X number. Could we get to a more definitive outcome, or do you think that this is mired in court challenges and it will be extended longer?
I think one thing stands out, Willie, that could shorten it based on what I'm looking at right now, and that is what if Pennsylvania becomes irrelevant. The vote total in Pennsylvania and the way things are structured in Pennsylvania means that actually tallying the million or so votes that are still outstanding could take several days. But if President Trump were to hold Georgia, were to hold North Carolina, but Joe Biden were also to hold Nevada, Arizona, and win in Michigan and Wisconsin, based on the numbers I'm seeing right now, he could win the presidency without having to win Pennsylvania. So that is what I would be watching right now is whether or not the states other than Pennsylvania get decided, at least on an unofficial basis before then, and make Pennsylvania moot. That's the question right now.
So on the House and the Senate side, the House appears to have stayed in Democratic control, but not quite with the margin that they'd expected. And the Senate is still to be determined. What's your thought as it relates to what happened last night in the House and the Senate?
Yeah, again, we didn't see the blue wave. There were some forecasts that showed Nancy Pelosi could be adding as many as 10 Democrats to the rolls in the House Democratic caucus. That didn't happen. We don't have a final tally yet, but it looks like more of a wash. And for Republicans in the House, that strengthens Kevin McCarthy certainly in his negotiating position with Nancy Pelosi going forward. In the Senate, it is still again unclear. We don't have a clear picture of control, but it looks like right now, given where the leads are for Republicans, that it's Mitch McConnell and Republicans are likely to maintain control in the Senate. It is not a done deal, though, still uncertain, but certainly Mitch McConnell and Republicans feel better about their position in the Senate today than they did 24 hours ago. they've had some surprising resilience among some of their incumbents, Willie, and I think the odds for Democrats taking the Senate have become more challenging.
Cayman, I remember distinctly 4 years ago where the futures market in the middle of the night was way, way off. And then by the time the market opened, it was back at basically even. And by the end of the first trading day, it was up significantly. I was watching the markets last night. Futures markets were pretty much in the green all night long. And then we wake up today and we've got the Dow up over 700 points. We've got the 10-year Treasury down by 12 basis points. And we've got a VIX, which is the volatility index, down by 20%. Can you help us make sense of what these markets are telling us?
Yeah, certainly. And thank you, Willie, for having me. Like Peter, I think all of us got to our Bloomberg terminals this morning and we're a little bit surprised to just see how orderly markets were. And to the point about volatility, the reason we're seeing volatility come out or the risk premium come out of markets is basically we're seeing a bracketed outcome. So it's no surprise to me that we're seeing that volatility indicator come down, but really it's important to look at what's going on underneath the surface. Because like you talked about, markets are rallying, the S&P is up 3%, but it is largely driven by three key sectors: healthcare, technology, and communication services. And so while there's still some uncertainty about a contested outcome, some of these sectors that would be more impacted in a blue wave scenario, they're catching a little bit of a relief rally today. And so that's what is helping drive this upside. As a reminder, tech and healthcare represent about 40% of the index.
And so as people sit there right now and say, I mean, is it with a VIX coming down as it has from 40 down into the mid 20s over the last couple of days, is the coast clear? Is it time to start putting money into the markets today and not miss this rally, or is it too early to have conviction about where the markets are going?
So Willie, it's hard for me to generalize just because you always want to make sure you look at individual circumstances. But for those clients that have allocated long-term money, this is the time to just sit tight. Markets are shaking out and figuring out overall direction. But what you got to remember is it is all about the long-term path and what is going on in the macro economy and future earnings stream. And Willie, if I could just spend a moment talking about our outlook. For some time, we've been calling for above consensus growth. We believed that the recession that we saw back in the spring and in the summer was basically a supply shock, meaning that the government had artificially turned off the economy. And as it turned back on, you start to see this rebound in manufacturing activity and spending activity. And so while the front page of the paper may still focus on those sectors that are more more challenged by a COVID world like travel and leisure, there are other sectors that are benefiting. And what we're seeing is that the consumer, which is 70% of our GDP, continues to spend. Those dollars they would have allocated to travel and leisure are being spent in other places like home improvement. The other thing that's really interesting about this potential for divided government, and I imagine we'll get into this more, is the potential change on corporate taxes. You know, Biden had campaigned on this idea of raising corporate taxes from 21% to 28%. Now that probability is coming down, that does take some anxiety out of the market. And in fact, that gives us even more confidence around our future earnings numbers going forward, whether it's 2021 or 2022. And just to kind of underscore it all, our outlook for the next 12 months is S&P between 3,700 and 3,800. That represents about double digits from today's levels. So to take it full circle, Willie, if you don't have money and if you have dry powder and you've got some cash on the sidelines, which happens to be many clients, you could take some nibbles here. But if you've made a plan and you have long-term money in the market, it is the time to sit tight.
So Peter, one of the sectors that Cayman didn't mention was the banking sector. Talk for a moment right now, because we're still waiting to find out who the next, either the existing or the future president will be. How's the banking sector look at a Biden presidency versus a Trump presidency?
I think, you know, like everyone else, all the other sectors, our approach to this entire election has been that whoever's president we'll be able to work with either side, as we have for the 150 or so years that the ABA has been around, certainly our members, and that's just by necessity. we won't control that outcome. I think it's fair to say that that our members looked at the prospect of another 4 years of President Trump, and they saw sort of a continuation of what they've experienced over the last few years. Certainly from a regulatory standpoint, Willie, it's fair to say that that our members feel like the regulatory framework in place that has been developed and put together since, quite honestly, the 2008 and the Great Recession has served the nation well. Certainly there have been some modifications along the way, but the resiliency that we've seen from the banking sector over the last little bit has been proof positive that the rules in place have worked. And while certainly our members are talking about some modifications to it, I think they're thinking largely that that it's proven its worth. And you've seen the resiliency right now from banks across the board. They've been able to step up, serve their customers and communities during this pandemic, during this downturn. And I think they expected that to continue no matter who's president over the next 4 years. They expected some change perhaps from a Biden administration if it comes, and they'll be prepared to handle it, but not a sea change, certainly in terms of oversight of the banking sector. And that's in part because the role banks need to play in the economy going forward.
So Peter, dive a little bit deeper as it relates to, so if President Trump is reelected, basically we have the same players on the field, if you will, from a regulatory standpoint, from a staffing standpoint. You likely will see some attrition in the West Wing of people who served the president for the first 4 years and want to take a little bit of, want to take a break. Whereas if we get a Biden administration, we get a wholesale change in the West Wing, and then also likely in some regulatory posts. Talk about that from the financial services perspective of the head of the Fed, the head of the SEC, the head of the Treasury. What's your take on what status quo looks like versus what, and you just kind of gave us what status quo looks like. If Biden ends up pulling this out, what's the change look like?
Well, certainly there'd be change. The president gets to select the people who serve in his administration for the most part. But you have to remember, Wills, that some of the regulatory positions, in fact, do roll over. And there is some degree of overlap between administrations. So first of all, as you said, if President Trump remains in office, we certainly think that a number of the people who are in positions of authority right now would continue in those positions. The Treasury Secretary, Steve Mnuchin, has been one of his closest advisors. He hasn't given any indication that he plans to depart anytime soon. The Federal Reserve Chairman, of course, critically important. The president nominated Jay Powell to serve in that role. He will serve in that role until February of 2022, and that's true if, for example, President Biden, Vice President Biden were to become president. So Jay Powell would continue regardless of who's in office. And in terms of other regulatory positions, Willie, you look at Randy Quarles, who's the vice chair for supervision for the Federal Reserve. His term also extends into 2021. He would still be there even if there's a President Biden. These are critically important positions that don't necessarily change with any change in power in the White House. Obviously, it is true that if there is a President Biden, he would name his own Treasury Secretary, certainly a new CFPB director, a host of other positions that would touch not just banking, but a host of other sectors as well.
Cayman, Peter just touched upon two people in particular, Powell and Mnuchin, who from many people's take, mine included, did a fantastic job at the beginning of the pandemic of putting liquidity into the system and putting trillions of dollars into both the banking sector as well as the overall economy to keep us going. Given the huge amount of capital that has been put into the system, what's your outlook? What's JP Morgan's outlook as it relates to rates over the next couple of years?
Yeah, and Willie, that's the question we get often is, okay, the government did what they needed to do. They gave that stimulus to help stabilize the economy, but now we're going to have to pay for it. Our deficit is growing at an exponential rate. And so what is that ultimate impact going to be? We have this great chart, Willie, that basically shows the deficit, but then alongside it, it shows the interest servicing costs. So the interest rate that the US government pays on our debt. And unlike a household where you and I have to pay down some of our principal on our mortgage each month, The US government doesn't. They just have to be able to service that ongoing debt. And so going into COVID, that trajectory was going up and we saw interest expense climbing above 2%. Now post-COVID and in a low interest rate world, that probably goes somewhere down to 1.5%. So if we were an emerging market economy, you would expect that interest rate expense to go up. However, because the US enjoys a certain reserve status globally, that interest cost remains low. And so interest rates going forward are more going to be a function of our domestic economy rather than the size of the deficit. And so as the economy heals, we believe it will heal, has momentum, those rates will increase, but we're likely in a low for longer environment, meaning that the Fed will not raise rates until probably sometime in 2023.
So you talked about two things there that I want to just go a little bit deeper on. One is the broad issue of trade, but you were talking about currencies, and it made me think about a chart that I saw this morning on CNBC, which was looking at the Mexican peso versus the US dollar. And in the middle of the night, the Mexican peso started to weaken, and then it gained a lot of strength this morning. And what the analyst on CNBC said was, this is saying that in the middle of the night, they thought that it was going to be a Trump administration, and this rally back on the peso is basically saying that they think it actually might now be a Biden presidency. Again, they're just reading numbers and saying what they think the markets are telling them. But it makes me think about trade policy. Because you've spoken a lot about trade policy, and JP Morgan has published a lot about the Trump trade policy and the trade war with China, vis-a-vis a Biden administration with what would be probably more of a pro-trade policy. What's your take as we sit here today as it relates to the outcome of the election, and if Trump stays in place, more of the same as it relates to trade policy, or could he take off a little bit of the hawkish stance on China? And on Biden, is it really, let's put NAFTA back together and repeal the new trade accord that the Trump administration put in place, like the Trump administration did on the Obama trade deals? Or do you think that it's less dramatic than that?
Yeah. So one thing that both President Trump and Vice President Biden can agree on is a tough on China stance. However, their approach to being tough on China is probably different. As you pointed out, if Trump is reelected, his tough stance on China, the potential for tariffs is probably out there. That might create some jitteriness within markets versus with Biden, it's probably a more measured approach. But either way, I expect this rhetoric and this toughness on China to be there for some period of time. How it plays out, we'll continue to see.
Peter, as you look at this kind of low interest rate environment and the banking sector and the overall economy, it appears that last night, I guess my core question would be this: what's your read as it relates to the COVID pandemic and what voters said last night in the way that they voted for the presidential election?
You know, I looked carefully at the exit polls that came out, Willie, and I looked to see where it ranked among voters, and it was clear that the economy was the number one issue for voters, at least in the exit polls that I saw. Obviously, the economy is tied to COVID, but in other measures, COVID was number 3 on the list, and if you were a Republican, it was lower on the list than perhaps some other issues. If you were a Democrat, it was higher on the list. So, but I think the two are interwoven so tightly. We are seeing the economy we're in right now because of the pandemic. And I think that's emerges as the clear priority for whoever is the next president. There are still questions about whether a stimulus package gets done and how quickly, how large it is. And that's going to dominate whoever the next president is and limits the window of opportunity in the political capital that even if there's a new President Biden or again, President Trump for a second term, the country, the nation will expect them to jump on that right away. And that will determine so many other things, including whether they can take on trade deals, whether they can do other initiatives, domestic initiatives or otherwise. The pandemic is going to determine the economy, and it's also going to determine the political agenda for both of these men, if either one of them, again, whoever of the two of them becomes the next president.
Do you think that there's a chance, Peter, that if President Trump does get reelected, that there is a lame duck stimulus bill?
Yes, I do. The chances of that certainly would be increased if it's President Trump. The size of that would still be in question, but I think that certainly would be an increased chance. compared to if Vice President Biden becomes president.
And Cayman, your thoughts on is that since the blue wave is basically off the table, a lot of people pre-election had said, well, if you get Biden, you're going to get increased corporate taxes and broader taxes, but at the same time, you're also going to get a really big stimulus bill that sort of offsets that drag on the economy. Now we've seen blue wave off the table. If Biden ends up winning, you're clearly having to wait until after the election for any kind of stimulus bill. And if the Republicans hold the Senate, getting that bill done likely will be far more challenging than if the Democrats take over the Senate. What's the thinking now on the calculus? Because you mentioned tax rates are sort of, right now, the market is saying corporate taxes might not move up by that 7%, but at the same time, it's also saying that the stimulus bill is probably a smaller stimulus bill than those had expected. How do we think about those two things?
Yeah, so Willie, earlier I talked about how we've had an above consensus call in terms of global recovery for some period of time. Our base case was a $2 trillion stimulus package. Now that the blue wave probability is lower, and if we are looking at a divided government, that probably goes somewhere in the neighborhood of between 500 billion and $1 trillion. So we still believe we are on pace for this V-shaped recovery, but the slope of that V may start to taper off as the size of the stimulus bill isn't as strong as we had originally forecasted. But please take that to mean we still believe we're on track. There's a lot of momentum in terms of manufacturing and spending activity. And so it is less than we were hoping for, or it's possibly less than we were hoping for, but it doesn't derail our thesis here.
And as it relates to the pandemic and a vaccine, I think there's a sense that we're going to have a vaccine early in the new year, and that will start to get widely distributed into kind of Q2, Q3. Where does JP Morgan change its outlook? Because you just said you've got a pretty bullish outlook as it relates to the overall macro economy. Where's that outlook change when all of a sudden the vaccine is delayed? What's that window right now that says that we don't get a vaccine until a year from now? My assumption would be that sometime around Q2, you guys step back on your bullish outlook. Is that fair, or do you guys stay to it because you don't think that the vaccine is going to have that much of an impact?
Our base case is that there's a vaccine available sometime in the first half of 2021. So if we don't get that, we will need to revisit our numbers. But Willie, this is the hardest question right now, because the next 3 months are going to be very interesting, because we're either going to have a lame duck president or a vindicated incumbent. And so what happens to the case count over these next 3 months ahead of inauguration? And so our core view is that there is no short-term shutdown of the economy, but depending on who assumes that presidency, you may have a more aggressive stance going into March or February. Now, again, the hurdle rate to shut down the economy will have to be very high. So it's not our base case, but something we're watching, just because we are in a period where COVID cases are climbing, even though mortality rate is trending in the right direction.
So Peter, on COVID a little bit more, we entered the COVID pandemic with a banking system that was better capitalized than ever before. And that was a lot of it due to the changes that came about because of Dodd-Frank. But the U.S. banking system was holding over $1 trillion of excess reserves at the Federal Reserve prior to the COVID pandemic. And then when we had QE3 come out and all the liquidity that I talked about previously coming from the Fed, those reserves actually ballooned over $3 trillion. And so we've rarely seen the banking sector this well capitalized in what was a sort of flash depression, and now you would say recession, given the overall numbers. What's the outlook from the ABA as it relates to the health of the banking system?
I think our members, certainly, as we talk to them, they're upbeat about what's happened right now, in the sense that this pandemic's been challenging. They've struggled to help their customers and their communities. And as I talk to a number of bankers, that they've been pleasantly surprised with the resiliency of their local communities and their own outlooks. And I think to a person, and of course we represent banks of all sizes, Willie, as I have these conversations with executives at large institutions and small institutions, I've been struck by how solid they feel their footing is right now. That is not to say that there aren't people out there challenged, that there aren't banks facing challenging situations, and that there's a lot of uncertainty out there. But I think they felt like they came into this crisis from a position of strength. They have supported their communities. Look at PPP and the amount of the participation of the banking sector in PPP, the unprecedented assistance they provided to customers, both individual and business customers. And I think they feel like at this moment in time, they feel pretty good. We talked about interest rates already. There are challenges out there for banks, Willie, as you know it. There's a lot of uncertainty out there, but I think overall the industry feels as good as it could, given the context we're in, the perspective where we are right now in the middle of a global pandemic and the downturn we've seen in the economy. There are 2 million bank employees out there right now, Willie, and they're working hard. And I think most of them feel that they've supported the economy and will be in a position to do so going forward.
Cayman, on that comment that Peter just made as it relates to the health of the banking sector, one of the things that I was projecting would happen is that we'd see real weakness in consumer finance, and that many of the big card issuers, I don't want to get into specific names because I know you can't opine on specific names, so I'll just keep it broadly as consumer finance of either card companies or those companies in auto finance and other consumer-focused financial services. We're going to have significant defaults and problems in their portfolios. And looking at Q3 earnings, it's been anything but that. And big banks that have big card businesses like you all do and others, as well as consumer finance on auto loans and other things, all basically beat expectations on Q3. When I hear Peter talk about the health of the banking system, and then I look at those numbers as it relates to consumer finance, I'm sort of left to a question of, is another stimulus bill actually needed?
We do believe it's needed, just because you've seen this great recovery in unemployment, but we still have 11 million Americans without a job. And so it has been one which we have recovered quite quickly, between 22 million and 11 million. However, the pace from here is likely much slower. So to make sure that those Americans are well supported continues to be something that we're looking for. So we do believe a stimulus bill is needed. And so is it between 500 billion and 2 trillion? We'll have to see how that shakes out.
And do those consumer finance numbers that I stated, or just the general overperformance of that sector, did that surprise you? Did that surprise JP Morgan of the health in the consumer finance space? Or was that projected because of the trillions of dollars that were put out into the economy by the first stimulus bill?
Mm-hmm. I can't comment specifically on the consumer financial numbers. The way we've been approaching the overall credit system is looking at those that are benefiting from a work from home or a contactless society. So we've been more focused on things like electronic commerce or contactless payment systems rather than the actual consumer.
So on that, just as it relates to pre-market or pre-election, there was a big move towards renewable energy because a lot of investors thought that a Biden presidency was going to lead to that. I did see yesterday that 4 states legalized marijuana last night. And so there's this big play towards legalization of marijuana. Are those right now, what's the take on sort of investing in certain sectors, or are those really more fads where people were trying to kind of get ahead of the bell, and now you really kind of want to proceed with caution as it relates to something that would quote unquote be called a Biden stock or a Biden sector?
So I can't comment on cannabis because we don't cover it. However, on clean energy, this would actually be an area that I'd be adding to. It is on sale today, as the probability of a infrastructure bill that includes sizable clean energy is probably lower. However, what's really interesting is that there have been more renewable resources produced during the Trump administration than in the 8 years of the Obama administration. So that's things like solar and wind. So this is something that we think is a durable trend, solar, wind, electric vehicles, and these are all areas that we see double-digit earnings CAGR going forward.
Interesting. So Peter, looping back a little bit to the political landscape, when we think about the Senate, what I heard you say was probably remaining Republican. We won't see changes in committee chairmanships at the Senate level. If we were to see the Senate flip, talk about.
We actually let me just stop you there, Wills. If the Republicans maintain control of the Senate, there actually are changes in the chairmanships among the Republicans based on term limits. Some of the key committees that touch the banking sector, for example. Mike Crapo's the chairman of the Senate Banking Committee. He would likely, depending on how things play out, likely move over to the Senate Finance Committee, where he is eligible to take that over for Chuck Grassley, who is term limited as chair of the Finance Committee. Chuck Grassley would move to Judiciary. So there is somewhat of a rotation of chairs, all determined by how many years they've had the gavel. And those changes, again, while not party changes, could change agendas and particular legislative priorities for some of those lawmakers. Pat Toomey would, right now, if Republicans were to hold the Senate, would become the chairman of the Senate Banking Committee. Again, that's how it would likely play out based on the expectations we've seen going in.
And with Grassley moving to Judiciary, does that mean that Lindsey Graham is also termed out, or is that a change that's just been announced because he's been there for a while?
Well, nothing's official, Willie, and there are still some machinations that need to go through in terms of the Senate Republican conference. They have to identify their preferences, but it's determined by seniority and how long you've had the gavel. So yes, he would have to make way for Chuck Grassley, who is obviously a veteran of the Senate. But Chuck Grassley would need to make some decisions about where he goes. There is a term limit system in place, and that's why you'd see more rotation than you might expect in a new Congress.
And no chance that Mitch McConnell is not the president of the Senate if the Republicans maintain control, or is that seat up for debate?
Willie, I think anything's possible, but if you did not see Mitch McConnell as the leader of Senate Republicans next year, I would be very, very surprised.
And similarly, on the House side, Speaker Pelosi stays in her position as the Speaker?
I think that's everyone's expectations in Washington. She has delivered the majority again. She worked for her members across the country, raised a tremendous amount of money. But you also have to look, leadership questions are real for these lawmakers. There will be, she has members of her caucus who feel that Democrats in the wake of this election need to do things differently. She'll have others who say, we met the test and we're going to continue to pursue these priorities. So it is not easy being Speaker of the House. For Nancy Pelosi, she has to do a lot of herding of cats, but I fully expect that she will be there as Speaker next year. But the question for some will be, when does the transition in leadership happen for House Democrats? And I think you'll hear those questions probably right away going forward. But Nancy Pelosi has delivered the majority for House Democrats, and given that, she will be the Speaker and the top Democrat in the House.
And so just flipping it for a moment, if the Democrats were to win the Senate, Chuck Schumer as president of the Senate, and then below that, talk for a moment about likely heads of the Banking and Financial Services Committee.
Yeah,
Finance Committee.
Chuck Schumer would be the majority leader of the Senate and the top Democrat in the Senate. And in terms of those committees, it's pretty clear who would take over. Banking would be chaired by Senator Sherrod Brown of Ohio, who's the ranking Democrat right now on the panel, well known to many people in Washington and around the country. And you'd see in the Finance Committee, which again sets tax policy, has a big impact as well on healthcare policy in this country. Ron Wyden would be in line, the Democrat from Oregon, to chair that committee. So these are folks who are very well known, not only to the business community, but the broader community, but they've not had the gavel previously. And so if they were to gain power, that would be a significant shift.
Cayman, given what Peter just ran through as it relates to, some pretty significant changes as it relates to the leadership in the Senate, were it to go one way or the other, do you think markets just kind of discount all that and it really doesn't have that much impact and they're really looking at, if you will, at the top of the ticket? Or does, the analysis on that have a significant impact on, for instance, Peter mentioned tax policy coming out of the Senate Finance Committee. Do you all focus in on that and will a shift there of Democrat versus Republican when we probably aren't going to find out for a while here? Does that have a big impact on the markets and on investors?
So I would argue it's on the party level, not on the individual, just because if we do get a divided government, it provides checks and balances to the system that I think will be rewarded by markets, that there isn't just one party in power to pursue their agenda. And so we view this as probably the most market-friendly outcome given the current fact pattern.
And Peter, last night there were a number of ballot initiatives that both passed and didn't pass across the country. You had, as I said previously, marijuana legalized in 4 states. You had a rent control measure in California that failed. You have the gig worker bill that passed in California that both Uber and Lyft were supporting. Mississippi replaced its flag. Colorado voters rejected a 22-week abortion ban. Do you see this as our country becoming increasingly, if you will, state-run and state-driven, where, I heard a stat this morning as it relates to the number of states that have either 2 Republican senators or 2 Democratic senators, and we seem to be seeing blue and red states having, very few kind of a one red, one blue at the Senate level. Do you see these ballot measures and the way that the president has said to governors, you basically take care of COVID, this kind of fraying of the fabric of the 50 states and more towards your state will define your tax rate, your state will define what the social norms are, and your governor will basically be your leader?
Willie, I'm not sure we can draw too many conclusions from that. There's a long history in this country about state ballot initiatives, about governors pursuing policies on their own. Each state has its own particular priorities. I do think a couple of things are worth noting. As Americans are frustrated by gridlock in Washington and a sense that both parties can't really accomplish that much working together, I do think you see more state legislators and governors, people looking to their states to solve some of their immediate problems. So that is a trend we've seen. I'm not sure if that means we're going to see more ballot measures. That's not always the most efficient way to get things done. But there were some notable ones there. And certainly at the state level, there are governors who feel like they can get things accomplished that Washington has not been able to get accomplished. I think that's something we'll probably be seeing more of going forward. It remains to be seen. I would note that a couple of those ballot measures, Willie, the marijuana measures are not insignificant. The percentage of the American population now that lives in a state where marijuana has been legalized in some form is quite substantial. And there's still a very significant debate about marijuana in this country, but you see those numbers in some of the states where those votes happened, and it suggests that conversation is changing. Certainly from a banking perspective, one of our conversations has been questions about banking cannabis, and there's been bipartisan legislation to try and clarify that for banks to be able to participate in banking cannabis. These are what's happening at the state level does have a way of funneling up to the federal level and trying to address that legal limbo, if you will, between state and federal law is something that we think certainly bears watching.
Cayman, Peter was just talking about state and federal law. One of the things I think many people thought would be potentially repealed in a Biden administration with a blue Senate was the SALT tax provision and the deductibility of state income tax, which would give some relief to the blue states as it relates to high wage earners moving to red states. Now that it looks like we either have a President Trump with a Republican Senate or a President Biden with likely a Republican Senate, there's unlikely relief there. Does that say anything to you all, in the real estate world, we're watching that like a hawk because we're seeing a lot of migration out of blue states into red states for taxes and tax policy and tax driven. And we're also seeing a lot of employers moving to red states and their population base is moving with them. Anything that you're seeing from a JP Morgan standpoint as it relates to either economies to invest in, municipal bonds to stay away from, anything that we ought to think about as it relates to migration across the country is from a tax overlay?
Yeah, the way I'll approach this is actually through markets, because one of the discussions we were having today is if it is a divided government, the idea of taxing unrealized gains is likely lower than in a blue wave scenario. And so that had been a risk that we had been watching closely, particularly in the tech sector that has enjoyed significant outperformance year to date. Were we going to see some pressure there? And then going into the back end of the year, you tend to see people starting to trim their winners. So was there going to be an accelerant, a potential accelerant, if there was this idea of taxing unrealized capital gains? So that is providing some relief to the market that probability is going lower, but that was one of the key risks we were watching, just because it is one of those things that feeds on itself into year end, creates that volatility, creates that anxiety.
Peter, removing your hat as being at the American Bankers Association and kind of reverting back to when you were a Bloomberg reporter covering Washington and watched the federal government to some degree try and break apart Microsoft and do antitrust hearings on a lot of different industries over time. Does the state of play today change a little bit on what Cayman was just saying as it relates to the tech companies and a lot of the rumblings that we're talking about trying to break up the large tech companies? Would you say that a lot of the rally today is due to the fact that those efforts in Washington have to take a back seat given kind of the political landscape and reality that we saw last night?
I think, Willie, that's a very tough call. This has been a conversation, again, separate and apart from what I'm doing in the banking sector. But if you're in Washington, you know this is a conversation that Republicans and Democrats are having. We've seen hearings on the Hill on this topic. So I'm not sure you can say that the election outcome means that discussion has ended altogether. I think there are tough questions being asked. Those companies have come to Washington to respond. I don't expect that's going to end because of the outcome we've seen or the outcome so far. Those are significant questions that I think will persist into next year going forward, and I think those companies fully expect that as well. I can't speak to what the rally in those stocks means today, but I think some of those questions about competitiveness, those will persist, and they won't just be tied to the tech sector as well.
Yeah. And Peter, trying to take you from your ABA hat to your reporter hat and now back to your DOD hat when you were working for Secretary Ash Carter. There's been a lot of talk about our country, both the election being manipulated by foreign actors, and then if we are in a period of time here where we don't have a clear outcome to the presidential election, that if there were to be any national security issues, that it would be quite a predicament for our country. For a moment, talk about the world through the lens of somebody who worked inside of the DOD, the work that the people you worked with every single day do to protect our country, and whether we ought to be sitting there saying we got the best in the world and we're good, or we ought to stay vigilant on this because we really are at a vulnerable time right now.
I think, Willie, every American out there, everyone listening and participated in the election, it's a divided nation, as we talked about earlier. But one thing we should all be able to agree on is that outside actors, outside nations trying to somehow sow uncertainty in our election through social media or whatever means they use is a problem for this country, something we should all be concerned about. We certainly, when I was at the Department of Defense, worry about that. I know that the Trump administration is worried about it. We've heard from the FBI director and others that there have been attempts to try and have an impact on our election. We should all be very, very concerned about that. And to the extent that there is uncertainty and this persists for a period of time, they're going to try and exploit it. We know that because history tells us that. And I think we've heard again from administration officials that they've seen those kinds of efforts, and we should all be worried about it. We should be very vigilant about it. And when you see something on social media, you should look carefully as to think about where it came from and try and answer that question. It is something that causes a concern for me, and I think it should cause a concern for everyone out there.
So I want to wrap up looking forward. Cayman, as you look out and see, if you will, the markets today have settled down. You've got green on the equity markets, and you've got a VIX that has come down. What's the curveball? Not necessarily a black swan event, because nobody, black swans are black swans because nobody knows that they're coming. So I'm not expecting you to identify what the next black swan is going to be. But as you look out with a generally speaking bullish stance on the markets, what's the thing that people need to keep in mind as it relates to this sort of the what if statement?
I would circle back to COVID, and that we are in this 3-month period before the inauguration where it's either a lame duck presidency or a vindicated incumbent. And so what does the case count look like going into January and into the inauguration? And so we don't believe there will be a shutdown in this 3-month period, but then the question is thereafter. So that's the thing we're keeping our eye most closely on. We had talked about fiscal before, but I would argue that this is the most important thing. But Willie, if I could offer just a few things that work regardless of the outcomes that we're all talking about today. One of our top sectors for some period of time has been healthcare. And I love this sector for 2 reasons. It is both offensive and defensive. It is defensive in that this is a sector that has delivered positive earnings growth in every year for the last 20 years. That's through 2 recessions, including the great financial crisis. For 2020, they're actually going to deliver positive earnings results. And then on the offensive side, this is an area that we continue to see a lot of innovation and is well supported by demographic trends. So when clients ask me, Cayman, what should I buy? This is actually something that is trading at a cheaper valuation relative to its long-term average and has these 2 tailwinds to it. The other thing is consumer. Go ahead.
Yeah, go ahead on consumer. Go ahead on consumer.
Yeah, consumer discretionary. Like I talked about before, consumers may not be allocating to travel and leisure, but they are substituting it in things like home improvement and e-commerce. So I'd continue to look through for opportunities there. And then finally, I'd offer a trim, because often what I see in client portfolios is that everybody owns the big tech names. And as I talked about before, these names have all had phenomenal outperformance, particularly in a working from home environment. Look at those exposures in your portfolio, because they now may represent outsized risk relative to your initial investment. So take a look there.
Great, super helpful. And Pete, as you look at the world, back to your ABA hat and then also your knowledge of DC, we obviously are in somewhat of not totally uncharted territories, because we certainly had question marks around the 2000 election. So many of us have seen this before. But beyond that, what are you thinking about as it relates to people need to be either looking at to give them insight into when the world's going to normalize, or be careful about something that nobody's really focused on right now?
First of all, I'm writing down all of Cayman's tips right here, so I've got them handy. Willie, it is an awkward moment for the country. As someone who, as a reporter, covered the 2000 election, it seems like just yesterday. I remember the hanging chads. I remember everything going on at that moment. I'm not sure how long this period will last. Certainly the country will benefit when we have some certainty in terms of who's occupying the White House, who's leading the country. I would go back to COVID as well, Willie, and as I talk to our members, I talk to folks here in Washington, policymakers and others. When we get a hold of a handle on this pandemic, there's going to be tremendous opportunities, and the country will be better served at that moment when we have a grip on it with all the other things we need, all the other challenges we have. Certainly the banking sector is looking forward to that. We're all looking forward to that moment we can all go into offices fully. We can see family and friends. We're not there yet. There's the prospect of that perhaps in the springtime maybe. Good luck to the folks in the healthcare community who are trying to address that problem. But the challenges we face are real, but they certainly as I talk to our members, they feel like they feel resilient and they see opportunity on the horizon. They feel optimistic about what can happen once we get past the pandemic. And I hope they're right. So no words of wisdom, Willie, other than a hopefulness that the country can move past not only the election, but the challenge, the healthcare challenge we face, because it's a significant one. It's going to be tough during the winter months, as we all know, and we'll see what happens in the springtime. But boy, it'd be nice to all get together and do these kinds of conversations in person.
Without a doubt. And I will just add to your comments there, Peter, as it relates to many conversations that I'm having on the real estate side, where it appears that I just had a call this morning with a bunch of very, very successful developers, and everyone seemed to be focused on the here and now and not where we'll be in July or December of next year. And there seems to be a thinking that, what we're doing right now of people moving out of urban cores and moving to the suburbs and changing their lifestyles is here forever. And what I continued to say in the conversation this morning was just that there's no doubt that's what's going on right now. But from an investor standpoint, particularly in the real estate standpoint, where you're building fixed structures, you got to think that we're returning at some point to life and business as we've known it before, and that people will return to offices and that people will return to apartment buildings in downtown areas, because that's where the jobs are. And so it's really interesting to hear both of your perspectives as it relates to kind of stay calm in the present, but then also try and think out. And the control of this pandemic is incredibly important, and basically all important to how quickly we can get back to the life that we all know and to markets performing the way that we all expect them to perform. I want to thank both of you for joining me today. I know today was a tricky day to come on, particularly because we didn't really know what we were going to be talking about yesterday. And so for both of you to say, hey, I'm up for kind of trying to read the tea leaves, which we all are trying to do, is greatly appreciated. And so Cayman, thank you for joining me. And Pete, thank you for coming on. Really appreciate both of your insights and help. And to everybody on the webcast, thanks for joining us. We're back next week with the CEO of Lifetime Fitness to talk about mental health and physical health during the COVID pandemic and the future of, quite honestly, the gym space and retail. So very much looking forward to that discussion next week. Thanks everyone for joining us, and have a great day.